Nice news. The Bureau of Statistics in Nigeria has finally released the rebased GDP figures for Nigeria, and also released its first quarter GDP numbers. So looking at the first quarter of the year, Nigeria now, well, actually, I feel like let's do the rebasing first. 372 trillion for full year 2024. So that makes us, using the exchange rate of 1,005, $243 billion economy, 18% growth in nominal terms, real GDP growth at 3.38. As far as first quarter of this year, 3.13, there we go, compared to 2.27 in the first quarter of 2024. The services sector was a highlight. That C is a contribution to the economy. Telco 7.4, oil production 1.6 million. Agriculture though, ouch. We still have work to do there. All right, also Afrinvest has released a new report on the insurance sector. This is part of our theme for the week. Jump on the work, don't let the work jump on you from sinners. I didn't bring the report, but there it is. I should have brought it physically with me. But there is the report there, transitioning pivots to sustainable growth. We're happy to have Damilare Asimiyu, who, of course, Macroeconomic Strategist at Afrinvest Research and Consulting, and Ikeoluwa Alabi, who is a Research Analyst at Afrinvest Research and Consulting. You are both welcome. Thanks for joining us. You guys, you did the work, and we're glad. But let's jump into GDP first. Damilare, your thoughts on the figures that we've gotten now in the Nigerian economy?
Thank you, Otis. Good morning. Thanks for having me on this show. Well, we also got that report yesterday. Largely, we are not surprised about the reports. The GDP has been rebased. Using 2019 as the base year, we have about $377 billion economy. I mean, in terms of trillion, rather, in Naira term, and in dollar term, about 243. But there are more to that report than those numbers. The report has given some insights and also has raised some questions. In terms of insights, we now realize that the impact of the pandemic was actually huge on the economy. In 2020, the initial data that came out suggested that the economy only contracted by 1.92. But the rebased data, which was taken from a year closer to the pandemic year, shows about 6.9. So that shows the magnitude. And of course, if you look at the trajectory in advanced countries, most countries that even released so much injection during that period in terms of palliative for their citizens had contraction of double digits. So how was Nigeria able to navigate it to 1.93? Of course, we can also argue that the pandemic didn't really have much impact in Nigeria because I think the lockdown period was just about 2 weeks or so. But yet, there were a massive capital flight that time. So definitely this data is more revealing of what happened that time. And also, it then suggests that it was after 2023 that we snap out of the effect of that pandemic, which means the World Bank estimation that suggests that Nigerians below poverty line rose from about 65 million pre-pandemic to 104 is actually correct, because if pandemic took 6.9 away from your GDP, and the next 2-3 years, the growth was 0 point something, 3 point something, I mean 2 point something, another 3 point something. It means that it was until after 2023
that you made up for that
covered up for that gap.
Right.
Now, another revelation from that report is that before, the real estate sector was nowhere to be found in our GDP computation. But based on the rebased GDP, the real estate sector is now the third highest contributor to GDP in terms of sectoral classification, accounts for about 11% as of 2024 year end. So the implication is that the tax team of the government have an area to touchlight, because that means we can get a lot from property tax. So another revelation from that GDP sector is that, I mean, the rebased number is that oil contribution to the economy now is now more tinier at just about 3%, which also further revealed that gradually the Nigerian economy is diversifying. The pace might not be fast enough, but at least we are making that progress. However, there are also questions raised from the rebased GDP. Now, one of the things that the NBS put forward in January during their sensitization exercise for this rebasing is that they'll be having 8 either sector or activity sectors. But in the report that was published, yes, why some of us analysts have an idea of where some of those 8 other sectors could have been captured, some you can't still even trace them. For instance, we have sectors like illegal activities that they said they will account for. You can't trace it anywhere in the report. By and large, the NBS should have done better by providing more clarity. All those 8 activity sectors that was captured in this new GDP rebasing, where can we trace them to? What do they bring in? Now, surprisingly, right, the new rebased GDP in terms of contribution still reveals that agri is still the aside for services sector that is the biggest. Of course, services sector, a lot of things constitute that.
Yeah.
But when you look at standalone sector, agri sector is still the biggest. If you look at it in terms of number, the rebased GDP pushed agri sector size up by 1.5%, 1.5 times rather. But when you then look at ICT, information and communication, now we added digital economy in this new rebased GDP based on what MBS said in January. But if you look at the new numbers, the information and communication technology segments of the both nominal and actual GDP contracted. It doesn't add up.
Yeah.
If you are bringing, if you say that you have not captured that sector well before,
it should be bigger.
And you are now adding more, it should be bigger.
Yeah.
Because if we look at the CPI that was rebased, the proportion that is allocated for telecommunication consumption used to be very tiny. But it has been moved up because an average person now spend more on data and call because it has now become an integral part of our life. Yeah. But when you then look at it in terms of GDP, it's tiny, and there is no enough explanation to clear that. And so many other sectors that was mentioned. For instance, finance and finance institutional sector too. The number contracted a bit in terms of naira nominal and actual side. Yeah. And this is a sector you said you are adding the activities of PFAs. So if you have other financial institutions before, banks and the likes, and you're having like 9 trillion as of Q4, using the old method. If you are then capturing PFAs and some other financial activities,
why is it shrinking?
Why is it shrinking back to 6? So these are questions that I feel the NBA should have preempt and have. But finally, before I draw a curtain on that, now the rebased GDP has given us the scorecard of Nigeria economy. Nigeria economy is $243 billion economy. You then make the task of reaching a 1 trillion economy more daunting. Because it is easier for Nigeria to reach a 1 trillion economy in 2022 than now. Because in 2022, our GDP in dollar terms was about $477 billion. At $243 billion today, there are only 2 reasons we can make 1 trillion economy in 8 years, which is to 2031. The first is that Naira will be constant at current level, and the economy will grow in dollar term or in constant term at 22.5%.
That is
flat. The other condition, if the economy will grow less than 10%, is for the Naira to appreciate to almost 6,500 level, which means the 2 options available to attaining the 1 trillion economy are very demanding. Not that it's impossible. I mean, I'm a positivist. I believe anything can happen. But it then means that the economic team of the government have their work cut out for them.
To double their efforts. Fantastic. Damilare, thank you for that deep dive there. We appreciate it. Ikeoluwa, let me come to you. So let's get into the, let's go from GDP, that's the wider narrative now, and go more in depth on the insurance report. Now, if we have a chart, 0.4%, you compared insurance penetration in Nigeria, which everybody's always been saying 1%. Some have said less than 1%, but you guys have it at, there it is. I mean, 0.4 compared to double digits in South Africa and the others. So why is it so low? Why are we still struggling with sub 0.5% insurance penetration in Nigeria?
I mean, rightly said, the insurance penetration rate in Nigeria is extremely low. I mean, 0.4%. I don't think it has ever even gotten to 1%. And it's actually concerning looking at, when insurance has been in Nigeria. It dates back as far back as early 20th century. So, I mean, the penetration rate as low as 0.4% is actually very concerning. And there are a lot of factors that are actually, that contribute to this low penetration rates. Now, the first one, and like a major factor, is our religious and cultural belief.
Can you say that again, please? Sorry, I don't even make you repeat it, but one more time.
Okay, I mean, our religious and cultural belief. So, Nigeria is actually a very cultural and religious country.
Blood of Jesus, right?
If there's one thing,
or anybody else. Yeah, go ahead. Sorry,
True.
Go ahead.
I mean, if there's one thing that is actually hard to take away from a Nigerian man, is belief, either cultural or religious. So, I mean, if you are, for instance, now, maybe you're with a set of people and you're talking, then you talk about, let's say, life assurance now. You see, they pause and look at you and be like, do you want me to die? Do you want something bad to happen to me? Or I'm covered by the blood of Jesus.
Right.
You know, all those kind of words like that. So our religious and cultural beliefs. So, I mean, because of that belief system now, most Nigerians don't believe in eventualities, that, you know, there's a probability that something would, you know, happen probably tomorrow or in the future.
Yeah.
So that's a major factor. Now, another factor is also low awareness, lack of information. Most people don't know what insurance is. Fine, they know the word insurance, but they don't know what it is. They don't know what it entails. They don't know how it works. They just, okay, so there's insurance. And, you know, so they just see it as, most people even see it as unnecessary expense.
Right,
They would
you're
rather
paying
not
for
subscribe
something
to
and you're not getting anything back immediately.
Exactly.
Right,
so they see it as luxury or unnecessary expense. So they are not even interested. And the third major point that is causing this low penetration rate is also the economic capacity of the individual. I mean, in Nigeria now, you see that when we look at our population, the breakdown, you see that the informal sector accounts for the majority of Nigeria's population. And when you look at this informal sector now, you see that majority of them are actually below the poverty line. So you don't expect a man that, you know, can barely afford 2 square meals to actually subscribe to insurance services. So these are some of the factors that are actually affecting the insurance penetration rates. And when we now go to, okay, what can be done to improve this issue now, there are a lot of factors that actually, there are a lot of things that can be done. The first one is strong consumer education, public education. You have to let people know that, okay, this is what insurance is. This is how you can benefit from it. So public education is one major important factor that, you know, can, you know, improve the penetration rate in Nigeria. Then another factor is also the adoption of technology. You know, so on the sales side now, that's the insurance companies, they've not been able to break through retail. You know, and like I said, the informal sector, that's the retail side, actually accounts for majority of Nigeria's economy. So they've not been able to, you know, create products that can actually break through that retail side. So increased digital adoption and technology adoption is how the insurance sector can also, you know, battle with these low penetration rates.
Fantastic. Thank you. You guys, again, I encourage everyone, download this report. Damilare, let me come back to you. We just talked about getting us to a $1 trillion economy. Part of that exercise has involved the recapitalization of the banks. I think there's even, you know, there's also, on an aside, we're trying to recapitalize BDCs, the Bureau de Change operators. There's also recapitalization of insurance companies. You've got a chart, and we'll put it up, with the new thresholds for the... talk to us about that and what that measure is trying to achieve by recapitalizing. Yeah, there's the chart there with the new thresholds, recapitalizing. We got, yeah, this was great. You guys put 2003 in orange, which is almost non-existent, and then in gray 2005, and a new one 2024. So, which is in past. Oh, so go ahead. What are we trying to achieve there?
I mean, just the same thing that what the banking recapitalization was aimed at. Strengthen the capacity of players in the sector to drive big ticket transaction. Unfortunately, we've had like two failed attempts of recapitalizing the insurance sector. I think one was necessitated by the pandemic. There was a push in 2019 for recapitalization, but because of the pandemic, it had to be put on hold. And there was one that came before 2015 also. That one was truncated by the fact that the regulator doesn't have, like, what I would describe as almost absolute power, like the CBN had. CBN could come out and say, I'm recapitalizing the banking sector, and nobody could come and, you know, sue the CBN. But we had that in Nigeria, and I think that's what the insurance bill of 2024 that was the National Assembly has passed. It's also trying to address. Hopefully, it gets presidential assent very soon, where the regulator, NICON, will have that power to be able to make policy. But those are part of the package, plus this recapitalization. So the recapitalization is designed such that those in the life insurance, instead of minimum capital of about 2 billion, will move to 15. The non-life will move from 3 to 25, and the composite, which means the firm doing both together, will move from 5 billion to 40 billion. So the impact or the goal of that recapitalization is simple. It's to give those insurance companies enough buffer to underwrite big tickets, and it to be a win-win for them and even for the economy, because when they have large capital to deploy to drive their business, it will create employment, and at the same time, it will create tax revenue for the government. But we hope the tax bill will be assented to, and NICOM will be given more power to be able to push for implementation of the recapitalization in that industry.
All right. Okay, well, let me come back to you. It's a great chart. In fact, Damilare was just mentioning the thresholds for life, non-life composite. You guys, very, very illuminative chart here, looking at the composition, I think, contribution to revenues for non-life insurance. It's pretty interesting to see oil and gas, I think, led the way. Yeah, there it is. So oil and gas, 34.3%. You got fire in orange at 21%. So talk to us about this chart here and how come, I guess, I know maybe because oil and gas assets are highly valued, they need to be insured. But yeah, what's happening with this chart here as far as composition?
Yeah, I mean, you've kind of answered
it.
So oil and gas, I mean, the sector, I mean, the assets are actually highly valued. And the sector is actually also a capital-intensive, sector. You need a lot of capital. Now, it's not just in 2024, actually. I mean, we've been seeing this trend. I mean, the oil and gas accounting for majority of the revenue that we've seen under non-life. And this is because of the high-value risks that, the oil and gas sector takes. So, and it's even interesting to know that just a single premium, maybe in oil facility or maybe, let's say, a pipeline project can actually account for like hundreds of, if you show that chart now, hundreds of the premiums that you
of the other sectors.
Exactly.
Right. Wow.
So the oil and gas, like I said, it's capital intensive, and it also comes from, requirement from either international organizations or the contract. So that's why we have that.
Well, Damilare, and look, we're just talking about GDP and how the oil and gas sector has shrunk in terms of its contribution to GDP, and while non-oil is so much larger. But you can see oil and gas still accounts for the bulk of our foreign exchange. It's taking up almost everything for what is it now? Composite of non-life insurance. But can you talk about vehicles? Because where is motor? Motor is in dark green, I think 14.7. I would think with so many cars online, you two of you drove here, all right? I'm driving when I leave here. Almost everybody has a car, right? And the mandates on insurance, I guess one would think that you would have it not being as close as oil and gas, but just because of the amount of cars we have and the lack of transportation options, although they are building them out. What's your take on why motor insurance could not be bigger in that chart?
I think before I will answer that question directly, let me say that data on cars in Nigeria are also not updated. The last time the NBS published data that gives us idea of the number of vehicles on Nigerian road was far back in 2019.
Wasn't it 700,000 that time or something?
Then they said we have close to 12 million, 11 point something. But if you look at growth, population growth, and increased urbanization and what have you, of course, we are not able to lay our hands on custom data to assess the number of cars that have come in, but we can extrapolate to say that at least number of cars in Nigeria, if that 2019 number was valid, will have increased to nothing less than about 18 million. But what is interesting about this is that why the car insurance premium has been very weak, relatively weak, is the fact that the infrastructure to enforce compliance of having at least that necessary or the compulsory third-party insurance is non-existent in most states. In Lagos, if your insurance paper expires yesterday and you drive today, you don't need any policeman to chase you. The moment you pass through where there is any hidden camera or visible camera, a ticket has been raised for you and you get it.
By text message?
So it can happen to you in Abuja, it can happen to you in major city, but that is just about 3 out of 36 states. So if you go to most other states, right, some people have cars they have been using whether within the state or what have you, for over the last 4 years, they have not renewed any of the papers. So basically, the reason why the car premium or car insurance premium has not been very solid is that the infrastructure that will support, because in Lagos, yes, I know there's a partnership between the Lagos State government, traffic management agency, and the insurance company. But it's that infrastructure that actually does the work. So once any of your paper has expired or you violate traffic light, they say just captured your plate number and issue you the right ticket. So until we have that kind of infrastructure in all the states, we are not likely to see a commensurate growth in car insurance premium with the number of vehicles in Nigeria.
Thank you for that. I'm really enjoying this segment. Newsday will be angry at me if I take up their time. Let's quickly move to another chart. And Ikeoluwa, this is, I think, non-life versus life, I think, in terms of revenue contributions. Is that correct? Yes. So, look, maybe you answered this in your first question when you're talking about the low penetration rate, but tell us why. I mean, it's just a gargantuan gap in terms of 75.7% of contributions in 2023 to 81% for non-life, and life insurance is shrinking. Why is that?
Okay, well, I mean, the gap between non-life and life being large, several factors are at play. I mean, when I talked about the penetration rates, I mentioned cultural belief. So, I mean, even in some communities, it's actually a taboo to mention life insurance.
Are you serious?
Yeah, because they feel, I mean, it's related to death or,
right.
It associates with death or bad luck.
Right.
So that
because we're immortal, we can't die, we'll live forever, right?
I mean, so that is one major factor. And another factor is also that, like I said, the informal sector accounting for a larger part of our economy now. So, I mean, those that are in the informal sector, they don't have access to, there's this employer-sponsored group life policy. I mean, if you are working in an organization now, you have access to these HMOs and group life policies. So those working in the informal sector, they do not have access to, these policies. So, which now brings us to, the talks of lack of product innovation in that particular market segment. Like, I mean, okay, so we've been seeing like maybe rollout of products, especially under the non-life market segment. But when it comes to life, the adoption rate for product innovation, rolling out life insurance policies via digital platform is still very low. So that is the reason why we have that gap. And also, I mean, we are seeing traction already. I mean, all these digital platforms are already taking this up, and we expect that the gap would be closed very soon.
All right. Well, I mean, we'll keep looking at the reports and seeing how it works out. Damilare, Ikeoluwa, thank you so much. Damilare, let me come back to you. Let's talk about stocks now. Because insurance stocks trade on the NGX. You've got two great charts showing, price earnings ratio of stocks in Nigeria are lagging their peers in other countries. Also price to book value as well. Can you just quickly, I think we're about a minute or so to go, to quickly touch on, I guess, if they're lagging, does that mean there's an opportunity to buy there? I think which chart is this? This is the price earnings. Great. So I think we're going to flip between the two as you answer. But go ahead.
So let's contextualize it. What is price earnings itself? Price earnings ratios is telling you what the market is pricing a particular company's stock versus the earnings per unit. So the price part is what market is bringing or market is offering. The earnings part is per unit based on your performance. Now, before 2024, the earnings of Nigerian insurance companies were dismal. For 2024, there was a significant improvement. So which means that the earnings, because this metric was for 2024, means that the earnings part of that equation, which is the denominator, improved. But yet, comparing the improvement in the earnings to market price, is still not, it has not fully reflect the true picture. And you won't be surprised, because for many years, there is that cold nature towards insurance stocks. I can tell you that last year, the insurance sector on the NGX was the second best performing, only after oil and gas, with about 92% return. This year as well, it has done 9 years, significantly lagging the market, but it can still do more. So to cut the long story short, right, given 2024 performance and the sort of traction we have seen in their performance in Q1, and the expectation that the reform of the sector will be implemented anytime soon, we'll think that with earnings of the insurance industry likely to continue to grow, market still has opportunity to price and position in insurance stocks and take advantage. We are seeing banking stocks now racing towards 100. The best of the insurance stock are still around 20 naira, and they have potential to double that. But they also have to be consistent in their earnings, and we think that will be achievable with improved infrastructure to support the operation, as well as strong capital. But Nigerian market present opportunities for investors that are interested in insurance stocks. All
right, so the opportunity is there. Okay, I guess just to wrap up, this is a great report. Again, everybody please download it. It's just good to have this information, and you guys have put all the information there. I guess, Ikeoluwa, I'll probably ask you the last question, the same question, because we're running out of time. Are you guys optimistic on the insurance sector? You see growth in the future? What's your outlook?
Yeah, I mean, we are actually optimistic
Yeah.
on the insurance sector based on, the efforts, the recent efforts that, are being put in place by NICOM, which is the regulatory body in charge of the industry, and also by the federal government. So we are optimistic. The recapitalization effort is actually one of the major, one of our major drivers that, okay, fine, we are actually, hoping to see like a major traction in this industry. And for a long-term investor, it's actually insurance stocks are actually, very good because there's this sort of upside potential.
Right.
Following if all these, efforts, all these plans, capitalization efforts, these regulatory policies that are being pushed, if they are properly implemented, it actually signifies that, the insurance sector is definitely going up. And we are not there yet, really. We are not there. Because when you look at some of the metrics of the industry now, we are not there. But the ingredients are actually there.
Yeah.
So definitely there's a pivot to sustainable growth in the industry.
Ikeoluwa Alabi, Damilare Asimiyu, Afrinvest Research and Consulting. You guys, you jumped on the work. You didn't let the work jump on you. Thank you so much for a fantastic report, and thanks for joining. Also to talk about GDP as well. Appreciate your time. All right, that's going to do it for the Global Business Report. Do stay tuned to Arise News. From all of us, thanks for watching. I'm Rutu Sodiri. Stay tuned to Arise News. Newsday is next.